Well, welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me now is Payne Capital Management President Ryan Payne. Also with us is John Lonsky this morning. Ryan, good to see you. Thank you for joining the conversation. We've got a market that is firmer once again, back in rally mode here, with the Dow Jones Industrial Average indicated to be open about 250 points at the start of trading this morning. The Nasdaq is up 150. That's 2/3 of 1%. The Dow up 0.5%, as is the S&P 500. Of course, it was a different story yesterday. All three major indices ended lower. The Dow tumbling nearly 600 points at 4 o'clock on Wall Street. Part of the issue was this continued deepening of a tech sell-off. Software leading the way. Amazon, meanwhile, sliding this morning. It's down 7.75% right now. It announced it's planning to spend about $200 billion this year on AI data centers and chips and infrastructure. The bulk of the investment going to an Amazon Web Services. Already you've got analysts downgrading the stock. Citigroup and Morgan Stanley cutting their target prices, not downgrading the rating, but cutting their target prices on the stock, feeling concerns about profit pressure with all this spending on AI. Ryan, we've heard this story before. What do you say?
Yeah, well, first I'll thank the analysts for re-rating after the stock slowly went down. Not very helpful, but I digress. It's the way it always is.
Yeah.
Look, I think the bottom line is the hyperscalers are going to spend something like $600 billion this year. This is clearly eating into their cash flow. But I wonder here, is this the end of this trend or this trade? I suspect not. The earnings picture still looks very, very strong. You saw the Magnificent Seven so far. They've reported very strong earnings. Looks like the spending is going to continue to stay where it is in regards to just AI infrastructure in general. But I do think, and I've said this a lot on your show, Maria, we are in the late innings of this trade. And you can see this with, you were just mentioning software stocks. Eventually, at some point when those valuations get too high, there's going to be some catalyst that's going to push these stocks down fast and furious, and no one's going to give you a warning. So I do think Mag 7, AI trade, tech trade, probably has another leg to go. But if you look at this year specifically, there's so many other places to put your money, just like last year, whether it's energy, materials, industrials, small caps, emerging markets, the list goes on. You don't really want to concentrate your money in the tech trade. And I've been preaching that on your show for like 2 years.
Yes, you have. And, Jensen Huang says that AI is changing every industry, and I'm sure that's true. But I keep asking the same question. When are we going to see the return on investment? I understand you just said $600 billion being spent by the hyperscalers, meaning the big tech names, and the rest of the corporate America is also spending. So have we seen an impact to margins? Have we seen an impact to growth and profitability in any industry yet? So that's all I'm trying to understand. Have we seen the impact yet of all of this spending, or are we still waiting?
100% yes. I mean, if you look at the S&P 500, it's at a record profit margin right now. So every company that's not the hyperscalers or spending too much are benefiting from the fact that AI is becoming extremely productive for companies. So I think that's the trend.
And it's more than just AI efficiency killing jobs.
And I think we actually have another problem. We're going to have a labor shortage, right? With baby boomers retiring in droves, we're going to need AI really just to supplement the workers that we actually have. So I know, we've had this no fire, no hire. That's not going to last long, especially with 4% GDP growth. Eventually, the job hiring is going to actually follow that. And I think we're going to be in a perpetual labor shortage where we're going to need AI to augment the fact that we don't have enough workers.
All right, so you're still all in on it. You're just concerned a little about valuations and want to broaden out beyond just AI stocks in the portfolio is what I'm hearing here.
Yeah, I love diversification. Okay. And yes, I think we're in the late innings of AI, for the record.
John, I'd like to know what the story is on crypto. I mean, you look at Ethereum, Bitcoin, what a come down. Of course, they're bouncing this morning. Take a look. Bitcoin is bouncing after yesterday's sharp sell-off. It pulled it. Now, Bitcoin is down, by the way, 50% below its October peak, when it was all the way up at, 127,000 or something. Same thing with Ethereum. You've got a sharp sell-off from the highs. Volatility across metals as well, as broader risk sentiment is weakening. This is another group that actually outperformed stocks and had a big come down last couple of sessions. Gold is holding below 5,000 right now. Silver logging one of the steepest weekly declines in more than a decade, John. I mean, you've got to look at these metals in context because they had an incredible year. in 2025 and even early on in 2026. What do you want to do here, John, when you look at crypto and metals?
Well, I'll let somebody else go ahead and buy Bitcoin before I do, that's for sure. I mean, it wasn't that long ago that some of the major figures in the crypto market were predicting a price of $150,000 for Bitcoin. But as you said, today it's less than $70,000. That's a big shock. And gold, well, gold is off. But gold is still higher by 70% from a year earlier. However, I want to add that the financial markets might welcome this decline in precious metals prices, gold and silver. Perhaps that's indicating in part that inflation expectations are moving lower, and that's going to be good news for interest rates.
Yeah, all good points. Great to see you guys. Thank you so much. Ryan Payne, we will see you soon.
Thanks, Maria.
John, you're with us all morning long. And, of course,